Welcome to my July 2023 update on the highest paying savings accounts here in the UK. And wow, there has been a huge amount of movement. Top rates, over 6% on some fixed accounts right now. So I'll take you through what's happened and where you should look to be moving your money if you want to move your money at all. And that does include another change to premium bonds. So I'll touch on that in a moment. What I will say is, even now, having recorded this, we're like 5:45 on Tuesday night. I'm going to put this live maybe half an hour, something like that. By tomorrow, there will be changes. The day after, there'll be changes. There have been so many changes recently, more than have been in a long time. We've seen a lot of increases, but this has been really big over the last few weeks. So make sure you head to becleverwithyourcash.com/savings. That is my website where every single day, me and the team are updating the best buy tables, all the top rates. So when accounts disappear, we'll take them away. When new ones are added, we'll put them on there as well. So I'll give you a kind of moment in time right now. I'll give you a little bit of analysis, a little bit of thoughts around it. But if you want to get sure you're getting the top rates, I don't want to wait until next month. You want to miss out on anything until next time I do one of these updates, becleverwithyourcash.com/savings. And I also want to say, I have to say this every time because your comments, people are always asking this. If I don't mention an account right now, it's either because the account isn't one of the top ones at the time of recording, or maybe I've covered it in a previous update in more detail, okay? But where are we? Let's give you some background as well. Maybe you saw my video talking about the latest Bank of England base rate increase, and that has informed many of the changes that we're seeing right now. I've got a whole video on it, so check that out if you want to see more details. But effectively, the Bank of England increased the base rate from 4.5% to 5%, a larger increase than expected. That is because inflation stayed the same at 8.7%. 8.7% is still high, not as high as it has been, but still high. And there's only a single account, I'll come back to it later, which can beat this, which is pretty decent, right? Sounds good. We'll talk about it more in a moment. But most accounts are still below inflation. So you've got to remember, even if you're getting the best possible rate here, you're still losing money in real terms. But that doesn't mean you shouldn't move your money and ensure you're getting a decent rate, even if it is lower than the inflation rate. Because if it's even lower than the top accounts, it means you're losing even more money. Before we look at the actual best buys, I want to quickly show you this table that I've created over on the website. I've got a whole article about this update as well, so you can see some more information there. Just to give you a sense of how much things have moved in the last 30 odd days. So my last update was 1st of June, this one the 4th of July. Look at that. So the best easy access account now 4.35%. A larger increase than the base rate implied. Limited access, we'll talk about in a minute, actually gone down. But then some of these increases, 0.78 percentage points, 0.59 percentage points on notice counts. Again, going into the fixes, again, 0.91% increase there, 0.8%. Some really big movement, including over on ICE as well as we'll get to. So just a good example there, a good sort of indication of exactly just how much rates have moved just in the last month. You compare it to the month before, even larger increases. It has been quite unusual, quite different to previous months to see such large increases. So let's talk about easy access accounts first of all. And there have been some big changes there, as you saw from that table a moment ago. The best paying one now, 4.35%. Big increase from the 3.82% we had just a month ago. In fact, there are a number of accounts now that pay more than 4%. In fact, more than 4.1%. I'd probably put that benchmark, what you want to be achieving at 4.1, maybe 4% if you're not so keen about moving your cash around. If you're getting below that, it's worth thinking about, can you move your money? Is there one easy open account to open? Transfer your money across to there and get that better rate. That would include also, a number of accounts that have increased their rates recently, which fall below that. And I would personally ditch them. So the likes of, what have we got? I've got listed Atom 3.95%, Zopa 3.92%, Chase 3.8%, Marcus 3.7%, that Santander eSaver, which was a great account earlier this year. That's just increased it by only around 3.75%, I think. Again, despite those increases come along, they can be very easily beaten. There are a number of accounts though, which even if they are kind of at a lower end of that 4.1%, it might be worth sticking with because they tend to move. They've recently, no guarantee they'll do this again, but they have been moving their money, their rates up a little bit. Crew and Tandem both at 4.1%. That isn't bad at all. And then more changes later on, they could well improve again. So maybe stick with those, but I would say below that, or accounts which haven't moved for a while or don't move that often, look at some of those better paying accounts. But don't just assume when you look at the tables over the ones I'm going to share with you right now, or the fuller list over at becleveryourcash.com/savings. Don't assume that if that account, the bank says this rate, that you're getting that. Synergy is a really good example of this. They're offering at the moment 4.12%, I think, which is great. But existing customers don't automatically get that. You have to open up a new account with them and transfer the money across. Or Marcus, for example, they're a bank that you have to go in and increase the offering, increase the rate to automatically get their higher rate, although that one is only around 3.7%, 3.75%, I think. So again, one to avoid. But again, don't just assume you're getting this rate. Go into your account, check what it is, and if you need to do anything to get that better rate. Let me show you, shall I, those best pick ones right now so you can actually kind of see where I'm talking about. So right at the top here, still this Barclays Blue Rewards 5.12%, only on up to 5k, and does require that Barclays Blue Rewards add-on. That is still the highest paying easy access account, even if it does have that those limitations. It may well be that if they don't make any changes and we get more base rate increases, then it's no longer the best one to go for. But in the short term, it's still the top paying one. But below that, that 4.35% proper easy access account from Family Building Society, 4.25% from Yorkshire Building Society. There's Chip at 4.21%. I wouldn't be surprised if they do increase that rate this week, next week, if we see more lenders go above them. They seem very, very keen to be the top of the table, although they weren't as instantaneous the last few weeks as they have been in previous months to make that move. So it could be they get into a limit. But again, I wouldn't be surprised they move up. And we've got a few others there at 4.2. As I said, a full list with all those accounts about 4.1% over on the website. Limited access accounts have also seen some changes as well. And these are worth sharing with you as well, because you can get, again, a decent rate here. And there's a couple of note that I want to share with you as well. Let's look at the ones right at the top. Yorkshire Building Society, again, 4.35% on balances of up to £5,000. So again, if you don't have much money and you don't necessarily need to access it because there's only 2 withdrawals a year, that's not a bad bet. But maybe slightly better, 4.3% from Principality Building Society, because you don't have that £5,000 limit on there, 2 withdrawals a year as well. Here's a couple that I want to share with you that are worth talking about, because although they are around 4%, which I say, I think you can beat 4% and you should be looking to beat 4%. If you like a big bank, or you already have accounts with them, you don't trust some of these newer ones. No reason why you should distrust any of these newer ones, but I know some people are like this. First Direct and HSBC have both made changes to their bonus saver account, or online bonus is called HSBC. Offers 4% in months you don't make any withdrawal. If you make a withdrawal, it drops down to 1.75%. So this is for people who don't really need to access their cash, right? They've increased that limit to £50,000. So that is a very decent paying option that you can get as long as you have a current account or savings account with those banks paying 4%. Now, I don't imagine they're going to keep increasing their rates, and if other changes happen elsewhere, they'll fall behind a bit, but they are definitely worth considering. And let's also quickly look at notice accounts, because again, we saw some improvements there. These are decent ones to consider, not necessarily the best options, but worth considering. Tipton and Cosley Building Society, 4.85% on a 120-day notice account. BLME, 5.09% expected profit rate on a 90-day notice account. Again, they are worth thinking about, these accounts there. If you don't need to access the cash for a while, then you can put them in and get a slightly higher rate. They are worth a look at. Okay, let's talk about regular savers or monthly savers now. And this is where that 9.5% paying account comes into play, which sounds amazing, doesn't it? I mentioned it earlier on. Snap it up, right? If it beats inflation, let's get it. Let's get this amazing rate. Sadly, most of us can't do it. It's only open to customers of the Saffron Building Society, and only customers who had an account prior to the 1st of June 2022. So you need to have had that account for more than a year with them, an eligible account with them. And if you are eligible, there's also another limit. The most you can put in every single month is 50 quid. So you're not actually going to make too much money from this account, even if you're eligible. A similar account is open. Again, another loyalty regular saver. And this is from Skipton Building Society. This pays 7.5%. And this is up to 250 quid you can put into every single month. You have to have been a customer, a member of the Building Society on or before the 31st of May 2023. So again, you may well be eligible for this account potentially there, and you can put more into it. So if you can get it, worth getting it. Makes it one of the better accounts out there. Below that, still the top paying ones. And let me get this table up for you so you can see exactly what I'm talking about here. Still that First Direct 7%. You have to have a current account with them. But again, up to £300 every single month in there. Plus there is a bank switching bonus worth looking at. My top pick is still that Club Lloyds account, 6.25% for their monthly saver. Yes, it's a lower rate, but you can put more money in. And you can get free Disney Plus from that account, or a free cinema ticket. So as a package, I think it works a lot better. There is a bank switching deal with them that's going to end in the middle of July. So if you are eligible, check out my separate video about that deal. The other one right at the bottom there, as you can see, Beehive money. This is a new one that's just launched in the last few days. This is a 6% paying regular saver, up to £250 every single month and go into it. And this has no requirements to be an existing customer or to have a current account. So if you don't want to faff around opening up accounts elsewhere, you're worried about a credit check on opening up the current accounts with First Direct or Lloyds or NatWest to get their digital regular savers, this is a really, really good option. Okay, let's talk about fixed accounts right now. And as you can see here, there are some really, really, really good rates. In fact, this is not actually as good as they have been. We had till today, I think it was, there was a 2-year fix at 6.1%, and the 3, 4 and 5 year accounts, again, they were also closer to 6%, if not above 6%. Now, that's not to say rates have peaked and we're starting to see them fall down. It's just how they are right now today. Tomorrow, next week, they could have gone up again. They could have gone down again. And this is one of the problems with fixes, as I tell you, every single month. It's really, really hard to know when to do it, because you might fix in and maybe you did it last month or the month before and you're seeing these improved rates and you're really frustrated. The only thing I can say there is you've got to be comfortable when you fix in that you're getting a decent rate, a decent return, and by fixing, you're guaranteeing that return, right? If you wait and rates don't improve, or in fact rates then drop, then you miss out and you might get less. I know it's frustrating. But anyway, right now, as we can see here, really, really high rates. All of them much higher than they were a month ago. 6 months, 5.34% from Alica Bank. 9 months, 5.29% from Oak North. 12 months, Close Brothers, 6.05%. Synergy, 5.91% for 15 months. BLME, 6% for 18 months. Close Brothers again, 6.05 for 2 years. Then we've got Castle Community Bank via My Community Finance, 5.98% for a 3-year fix. We've got Synergy Bank, 5.75% for 4 years. And United Trust Bank, 5.7% for 5 years. Again, not quite as good as they were just at the end of last week, around 6%. Still well worth having a look at those different accounts. Got some improvement on ISAs as well. Not necessarily as big a change on the easy access as we've seen on normal easy access accounts, but Gatehouse currently offering 4% expected profit rate. That's a decent one to consider. Limited access, slightly better than that. Coventry Building Society, 4.1%. That rate's going to change in the next few days. And then fixes, we've got Zopa, 1 year, 5.21%. Close Brothers, 2 and 3 years at 5.25%. Zopa again, 5.15% for 4 years. Close Brothers again, 5.15% on 5 years. And also the lifetime ISA from Moneybox, that's improved also to 4% for the first year. It drops to 3.25% after that. So lots of improvement there. They are the top ones. Again, more of them, more options listed over at becleveryourcash.com/savings. Now, I want to talk about premium bonds now, because there has been 2 increases since my last video. First of all, the July draw, which took place at the time of recording yesterday. So you would have got your results today. I got £100, which was great. Really pleased to see that, having had not much in my previous last few months. So that was a great win for me. That prize draw for what happened today increased to 3.7%. Previously, it had been 3.4%. I did a whole video just a few weeks ago taking you through that in detail. There's been another increase that was announced on Friday. This means the August draw is going to increase again to 4%. And this shows you here exactly what the difference is. Like, I'm not going to go into all the details. Check out my previous video for the kind of, is a premium bond worth it or not? Because this increase is great and it got better chance of winning, bigger prizes, and a better chance of winning. But watch that video for kind of a general gist of how things are going. There's no point doing that same video again just 2 weeks later. But as you can see here, there is a larger prize fund right at the bottom there. The August draw will be just over, there we go, 404,858,225. That's a lot of money. Much bigger than, a decent amount bigger there than what we had there, an extra 25 million in prizes. But also there's more prizes available as well. So there, 5.5 million versus just over 5 million here. So again, the prizes, there's more money available and there are more prizes available. And the big change this time compared to the last few increases to the prize rate is that the odds have changed as well. They've dropped from 24,000 to 1 to 22,000 to 1. So still, quite high, but you've got a better chance of winning. As you can see from this table here, if you do win, you've got a better chance of winning a more valuable prize. So I'm not going to go into a full lot of analysis here on the premium bonds, they won't, but I will also say, even though 4% as a prize rate is better than it was last month and better than it was 2 months ago, it's still not a guarantee you'll get that 4%. And as we showed at the beginning, those easy access accounts we looked at, 4.35%. I expect that to kind of be matched, if not beaten, by a few other accounts in coming days. That's a guaranteed return. You're probably going to be better off with your money in an easy access account, or if you can lock your money away, even better off in a fix. So lots to pack in to this July update. There will be more changes, so make sure you do check out becleveryourcash.com/savings. And if you want more help on your savings, more ways to boost them, check out these videos right here.